there, and welcome once more to the Open Door Show from propertyCEO. It's great to have you here again. And obviously, I don't do as many Open Door shows. My colleagues are doing them. But hey, if you want to vote who's the favourite one, then obviously vote for me. If you don't vote for me, don't vote at all. As always, over the next 30 minutes, we're going to take a deep dive into the world of property development, small-scale property development, with a bit of a twist today. We're talking to the movers and shakers, people out there that can help you either start your journey or keep your journey going or solve some of those problems that you have. And above all, have a bit of fun doing it. Definitely going to have a bit of fun today. I've got a great guest on today's show. I've got a chap called Paul Stewart. He's from Elite Wealth Property Consulting. And I had the great pleasure of meeting Paul out in the Middle East, in Dubai. I was out there earlier this year, had an interesting conversation with Paul, and I thought, I've got to get him on Open Door. He's a busy man, not always able to get in, but I'm very pleased that I've got Paul here today, and he's going to better help you all on how you're going to set up. If you're based in the Middle East, if you're based anywhere overseas from the UK and you want to develop in the UK, Paul can help you from a tax point of view. We don't want to pay tax, do we? So great pleasure. Hopefully he's there. Paul, are you there?
Yes, Richie, I am indeed. So lovely to see you. Thank you for inviting me on today.
Oh, nice to see you. Glad you showed up. I know you're a busy man, and I do appreciate your time here today. And so we met back in Dubai, I think, earlier this year, wasn't it?
We did indeed, yes. It was one of those hot, sweaty evenings, and yeah, it was good fun.
That doesn't sound good, but it was actually a networking meeting, I can assure you of that. Paul, Elite Wealth Property Consulting. Before we sort of get into some questions, I've definitely got some questions here fired up for you. What does Elite Wealth Property Consulting do? And tell me a bit about Paul Stewart.
Okie doke. Elite Wealth Property Consulting works with people who are non-UK based, who are looking to make property investments into the UK and basically set themselves up with a company that doesn't have to pay UK tax, which is quite handy if you're not UK based. I also own and run a SaaS pensions company in the UK, and I've been doing property and tax work through UK pensions owned by company directors for many years. So I thought I would branch out and offer the same solutions and services to those that don't live in the UK.
And are you based permanently overseas? I don't think you are. You spend time between the Middle East and the UK. Is that correct?
That's right. Yeah, I'm spending the whole of this tax year over in the Middle East, and then I'm heading back to the UK in April, and then I'll be bouncing backwards and forwards between the two from then on.
Good. And this is all about tax. This is all about saving money on our property journey. So that's so important for us to do that. So if we just think about this to start with, wherever you're based out there, if you're listening to this show, so maybe you are based out there in the Middle East, maybe in the UAE, we've got a lot of students in the Netherlands, so maybe you're based in the Netherlands or anywhere. We've got students internationally across. The first thing then, in terms of investing in the UK, so Paul, we've got an international student wanting to develop property in the UK. What are the things that we have to be thinking about from a tax point of view?
Well, normally they're advised to do everything inside a UK limited company. And as we all know, the taxman takes tax on all of the rent and the profits made by that company, which is a little unfair if you happen to live in a tax exempt environment. So what we're doing is trying to work out a way of actually structuring the deal so that there's no tax for the limited company.
No tax. So we've got the possibility here, if we're in the Middle East, if we're not paying any tax, we can actually set up our UK company, because we have to have a limited company to bring the commercial funding to this from a development point of view. But you're saying that there's a way that we can set this up that we don't have to pay any UK tax ordinarily that we might have to.
Yes, indeed. Yeah. If your UK company is plugged into the right tax structure, then that UK company doesn't have to pay any tax. All of the profits, proceeds and rent go back up into the tax structure. It's something which has actually been around for many, many years, but it's only just recently been flexible enough to be used by the small property investors.
So this is not something that's new. This is not something which is a bit underhand or a bit iffy. This is the rules allow us to do this.
Yeah, one of the structures has been around since 1939, so it even predates me.
Well, there's a question mark about that, perhaps one would say, watching this. But yeah, so okay. So all we're now doing, you say it's become more flexible. What has this flexibility now enabled us to do if we're based, as I say, perhaps maybe in the UAE?
Yeah, in the past, your money that you wanted to invest in property would end up in the hands of some fund manager where you had no control, no decision making. Whereas now we have the flexibility where you have control of the money. You can make the decisions on what property to invest in, what refurbishments you want to do. So it's an active structure as opposed to passively handing your money over to a fund manager.
And property is a good vehicle to do that in. And we all know that property is one of the most secure assets. It's not by a fund manager into different companies, which can go up and go down. Property generally in the long term goes up. Is this linked to a pension setup, or does it have to be linked to a pension setup?
Yeah, somewhere along the line, there has to be a link to a pension. There's an international pension which is globally recognized. Now, if you're investing into UK property, you don't have to use this structure, the pension, for all of your investment. You just need to have it in the chain. So a proportion of your investment goes through that structure, and it's that structure that gives birth to your tax-free company. The rest of your money can be loaned in as normal.
And so you say it's an international pension. This is a recognized setup, a recognized process across the world, is it?
Yeah, pretty much. There's very few jurisdictions where these are not recognized. And it depends where the client is coming from and what their situation is as to how it is structured. But fundamentally, it's recognized by the United Kingdom tax authorities as being tax exempt.
That's the key then, because what we're trying to avoid is, so if we're based, we talked about in the UAE, we're not paying any tax. We don't want to have to pay tax in the UK. What about if we're based, we have a lot of Dutch students. What about if we're based in the Netherlands? They obviously have taxes to pay. How does this benefit them in being exempt from the UK tax payment part?
Well, they can still use the same structure, and they can put a proportion of their investment into that structure, and that then shelters every UK tax from the whole deal. And then what they draw out for themselves personally is taxed according to the Netherlands tax rules. But it can be structured as return of capital.
And if we've got a pension pot, okay, so there's going to be a lot of our Dutch students who have pension pots, and they're at that age where they're looking to get more value out of that. They're controlling their pension pot, and maybe people with pension pots, maybe in the Middle East. How do we tie this pension pot to this international pension structure? So what if I'm in Holland and I've got my own Dutch pension pot? How do I link all that together?
Well, those pension pots, they can be transferred across into either the international pension or indeed a UK pension. So once the funds have been transferred across, they can then play with those and use those for their property development journey.
What if I got lumps of cash? So what if I'm based, so I'm guessing this is going to apply to a lot of potential property developers, people who's interested listening to this, want to get into property development. They're based in the UAE. Certainly my experience of being out there earlier this year, I've had a few visits out there. People are saying, yeah, this is great. We're loving life, but we've got to have something to come back to, because we do want to come back at some point. And they've got quite a lot of cash swimming around. How do they get that? Is there a way they have to use that cash in a certain way to get that into their property development from a tax point of view?
Yeah, basically, we have a conversation. Everything is bespoke for the client, and this is really important. It's not a one-size-fits-all thing. So we talk to the client about how much of that cash needs to go into the tax structure, and then it can be personally contributed into the international pension. The rest of the money, which stays outside the tax structure, can still be loaned in to the company in the UK. So the company in the UK will be tax exempt, and it'll have two sources of money, one from the pension, one from the client lending personally.
Okay. And so that personal money that goes in, that can be paid back as a standard loan. Can that bear interest as well?
Yes, it can bear interest, and it should bear interest. And that money will come back out to whoever is receiving it. And if they are tax exempt for interest that they're receiving, then they don't need to pay tax on that.
And why would we keep some of that money separate? Why wouldn't we put it all into that international pension pot and then invest it?
The reason is flexibility. There are certain constraints inside the international pension where you can't just say, please write me a check. You might have to borrow the money from the international pension. So to cover all bases, we give clients as much flexibility as possible. It also keeps the costs down because we want to minimize what goes into a tax structure where there are fees and charges to be paid.
So this money that goes into the international pension pot has got rules and regulations which one would expect around it. And so whatever you're putting in there, you don't want to have to expect to take that out and go and buy yourself a nice holiday home. That's got to be tied up as part of a pension pot. And as you say, there's going to be fees around that, which the loan notes wouldn't effectively attract those same sort of fees.
Correct. Yeah. So the first part of any conversation with a client is to establish long-term what they're trying to do. And then from there, we can determine how much goes into the tax structure and how much doesn't. But as long as the minimum amount goes into the tax structure, they can then have a multi-million pound property development company in the UK, totally exempt from UK tax.
And let's talk about an expat. What if an expat then returns? Their long-term plan is to, I know you said quite rightly, everyone is bespoke. You've got to talk to everyone individually. So let's say I've got an expat who says, well, what I want to do is eventually, when I get to 55, 60, whatever, I want to return to the UK. Has the structure that they've set up for this duration to do their developments, has that got any implications in terms of returning back to the UK?
No. It still remains tax exempt. It's only down to if they want to take money from the structure, they'll be taxable in the UK because they are tax resident there now.
When they come back. Okay.
Yeah.
And if we're looking at, we talked about taking lumps of cash. What if we want to take some income out of that? So there's definitely some developers who want this mix. They certainly, when people get into property development and they can earn 400,000 profit out of a deal every year, a lot of them will say, well, I don't need all that money. I'm going to now I'm going to develop, say, a dozen flats, and I'll keep 3 or 4 and I'll sell the rest. I'll take some cash. That rental income, does that rental income have to go in to that international pension pot so they can't get access to it? How does that work?
Okay, the rental income goes into the limited company. That's the first thing. It goes into the tax-exempt limited company. They can then choose to charge management fees to the company for their services in terms of looking after the property. And those management fees could be charged, for example, by their company in the UAE, which in turn pays them a salary, which is tax-free. So they can do it that way. If there's a loan in existence, that company can then repay the capital and the interest on that loan to them as an income. It's still a monetary amount paid monthly until such time as that loan is settled.
Interesting. And what's the alternative? If people, what are people generally doing if they're not getting this specialist tax advice? What do you see happening?
They normally get advised to put all of their money into a UK limited company. The UK limited company does property development and pays tax on all the profit. So it's 25% corporate tax gets paid on all the profits, all of the rent. And people are told that's just the way it is.
Is that because, you're a tax specialist, you're not an accountant. Is that because their accountants who are probably giving this advice just don't understand this stuff?
I think it's down to the fact that it's been the way that people have done it for so long. You set up a limited company, you do business in the limited company, and you pay the taxes according to the location of that limited company, which is the UK. Everyone just accepts that's the way that it's done.
And how do you get on then? Because you're not going to become someone's accountant. Someone can come to you to set up this specialist structure. So you would set this up for them. Would you then liaise with their accountant on this process?
The structure itself does its own accounts. So part of the structure and the cost of the structure is all the accounting is done. As far as the client is concerned, all they have to do is provide management figures, management accounts, what the money was spent on, what contracts have been signed, because the company itself won't be declaring any profits. It will be submitting dormant accounts, but the structure itself does what we call consolidated group accounts. So all of the accountancy is dealt with. That's not a cost that has to be borne.
Okay, so that's within the service. This is the service that you provide, an all-encompassing service for people to get this whole thing controlled for them.
Yeah, The tax structure is provided by an organization in the United Kingdom, and they do all the accountancy work. They've got a big accountancy firm that does all the accounting, and that's part of the tax structure. All the accounting is done.
And what's the initial step? What are people got to do? So someone's listening to this, and obviously this stuff is complex, and in the short time that we have available today, it's very difficult for people to totally get a grasp of it. But fundamentally, we're talking about paying no tax in the UK, and you'll be taxed in your own country or not, depending on how you wrap this up with a pension fund. What's people's first move to do this? Is it an initial inquiry with you, and how does it work?
It's really simple. People can go onto my website and they can book a time to have a phone call. There's no fees or costs or obligation. And then I like to sit and talk to find out what the scenario is, find out what somebody's plans are. I ask them pertinent questions about, are you returning to the UK? Do you need an income from this structure? And so on. And from that conversation, I can then determine whether it's right for them. It might not be right. And we do find in occasions that it's not right for them. It doesn't fit, doesn't work. And we also find out exactly what their situation is in terms of the balance between money into the structure versus money not going through the structure. I can answer questions on that phone call, and the phone call is not time limited. So I've had calls that go on for a couple of hours.
And who might this not be right for? What's that scenario where this doesn't fit?
This may sound really bizarre, but it tends to be people who don't have capital to put into the structure. So someone comes along and says, look, I've already got 3 properties in the UK. I want tax advice on them. Well, they're already there. They're already in the company. There's not much we can do other than time travel. So that tends to be the most common failure, is people who've already got something in place and they're not in a position to create something new.
Yeah. Do people have to come? Is this structure only suitable for people with large lumps of cash around them? So what I'm just thinking of a scenario, we certainly have a lot of people who want to do development who, let's take some of our Dutch students, or maybe some of our students in the UAE, particularly some of our expats who I've personally met and chatted with, who they earn some great money, but they live a great life. And one individual I was chatting to, he said, we love life, my wife and I, and we spend everything. Okay. So he said, we don't have a lot of savings around us. We've just lived like a lot of people do to the level they're at. He's now triggering the fact that, hang on a minute, I don't really have that significant pension pot. And property development can earn those lumps of cash. I mean, I've got students earning £1 million out of a deal. So I think people are looking in at it and go, wow, I could do that with the right education, right support, and right guidance. But they don't have that money to start with. So they could be turning up. So I can show them a structure where we can raise most of the money privately and commercially, and they have to have very little seed capital. What about those type of people? Is it not suitable for them because they don't have lumps of cash to start with?
I think the start with bit is the crucial thing. They can start up and they can do things and get your services and generate money. Once they've done one deal, and yes, they'll have to pay tax on it, they then generate the lump that can go into the tax exempt structure. So they effectively can migrate themselves across when the time is ready, when they have a lump able to put into it. So yeah, I've got clients who I'm just waiting for them to finish deal 1. Once they've finished deal 1 and they've sold that out, yes, there'll be tax to pay, but then they've got the lump so they can put that into the structure and then they can get cracking.
And is there a minimum sort of lump of cash that we need?
We tend to talk between 150 and 250 in terms of sterling, 150,000, 250,000, around about that sort of level.
And so if they don't have that, and there's going to be a lot of people that are listening to this, what we're saying to them then, Paul, is go and do your first deal, because this structure doesn't work for you. Go and do your first deal, pay your tax, then you're probably going to generate your 150, 250,000. Then we set the structure up.
Yes. Absolutely right. Absolutely right. And of course, some people I speak to during this conversation, they forget. They say, oh, well, actually, over in the UK, I do have a pension scheme which has got a couple of 100,000 in it. Can I use that? And that opens up a whole second level conversation. But the answer is yes, of course.
And so sometimes that conversation which you're encouraging people to have with you, so even if someone sat there, I guess this isn't, people don't want to waste people's time. I get that.
Yeah, yeah.
I don't want people to waste your time. But if someone sat there now, an expat, okay, anywhere in the world, but they don't have that money and they know they don't have that pension pot, is it still worth having that initial chat with you now to talk about what we are going to set up, or should they just not do that for a year or two until they've done the first deal?
It is a difficult one because on the one hand, I want to offer my help and support to people so they've got a goal, they've got something to aim at, because that's always motivational. And I think that's really important if you're working with clients, that they have got this end in sight. So yes, I think an initial conversation is useful. But having said that, what I can't do is spend 8 hours a day having conversations one after the other with hundreds of people who none of this works for. So I want it to be an aspirational target, and I want them to know that the conversation is available when it becomes closer and becomes a realistic thing for them to do. I've done a bunch of videos on my website, and that's probably their first port of call. Sit and watch those. It explains everything in detail, and at least they can start to get their brain around the fact that there is this possibility. And it will change. It will change because we've got a budget coming up at the end of October as well.
Yeah. So and these things forever change. So yeah, definitely reach out to Paul's website. We get his website details. I'll get him to give you those in a minute, and we'll put them in the show notes. But have a look at those. And I guess it's about being respectful with people's time. So a short phone call with you, and someone says, "This is where I'm at. Just tell me roughly. This is what I'm thinking." That wouldn't necessarily be a problem. You could point them in the right direction, but they need to expect that to be reasonably short in that process.
Yeah. I mean, I don't mind having a 20-minute conversation with somebody. It's always good to let them know they're not doing this on their own, and there is somebody in the wings waiting to offer that help. They may have questions from watching the videos to work out whether this is something that fits for them, and I'm more than happy to take that time.
Yeah, no, that's good. That's good. That's excellent. And again, even if we're again, I'm going to go back to the Netherlands. Okay, I'm a Dutch person. I want to develop in the UK. I've got some. And I think we did talk about this, but I just want to make sure in my mind, because these things are all popping in my head. If I'm a Dutch person and I've got a pension pot, that I've earned through my commercial career or whatever, that I can transfer that into my international pension pot and make this system work for me.
You can indeed, yes.
Wow. So it sounds like it's superbly powerful. It's people just need to know this stuff is out there.
Yeah, that's the thing. I think if you look at all the tax legislation books and stack them end to end, they're taller than both of us, and nobody knows all the answers to all the questions. And if you are looking after companies that are doing property development, that's your job. What you're not doing is looking at international pensions legislation and how the different structures can be used.
I can't think of anything more boring. I mean, I think if I spent time reading books on pension legislation, I would definitely drop off to sleep. That's for sure. What makes you different, Paul, to anyone else out there?
I think it's the fact that it's not just a pension on its own. It uses unit trust legislation, and I'm the only one in the UAE who's actually got that available.
Wow, so quite unique out in the UAE at the moment.
Yeah. I mean, I've worked with the providers on many things over quite a number of years, and to be brutal, they only want to have somebody who understands it out there in the UAE, because their job is not to train and support and provide the answers. That's my job. So because of my knowledge and experience with them and the structure and the rules behind it, I feel comfortable that I can field all of the technical questions that anyone could possibly need, and that makes life easier for the unit trust provider.
And how do you win out of this? You presumably get commissions out of setting up these structures?
No, I charge an engagement fee to people, and their business in the UK can pay that if they wish. I'm providing technical support and training, and I don't charge commissions.
Excellent. So it's really clear what people are paying for, and of course they're going to save all this tax. And are you with them? This is not something you just set up and leave them to it. Once you set this up, you and your organization behind you are with them throughout this journey. Is that correct?
Yeah. Although, to be fair, there is also a team in the unit trust company, and they are there because they're doing the accounting and they're liaising by email backwards and forwards, saying, "Oh, we've got a bank statement saying that you've just spent 25,000. Could you just tell us what that was for?" So between us, either myself through my company in the UAE, or indeed my UK company, as well as the unit trust provider in the UK. There's hand-holding support at all times.
And do people need their own accountant to work alongside this, or do they not need them?
They don't need an accountant because all the accounting is done inside the structure.
So there's, when we talk about fees and expenditure, it's literally spending one money over here as opposed to spending it perhaps to your accountant. So we can spend some money with you and your organization rather than spend it with our own accountant.
Yeah, I mean, the fees inside the structure are paid to the unit trust company, not to me. But you might need a bookkeeper to manage the numbers that come in and the information. If you can do management accounts and operate an Excel spreadsheet and email that once a quarter, then you don't need an accountant.
No, but I'd encourage everyone to get a bookkeeper because there's nothing more boring than doing numbers. So actually get a bookkeeper to do that. They're so cheap. And then you're probably going to get a lot more accuracy and less questions coming back from the unit trust company, aren't you?
Oh, yeah, absolutely. Absolutely. So, it's having the paperwork behind it. So when you've spent some money, where's the receipt? It's as simple as that. Spreadsheet plus the paperwork, email it off once a quarter. And a bookkeeper is absolutely sacrosanct. You do need that.
And just one last question before I need to let you go soon. I know you've got a busy day. When we're doing development, we're doing a limited company, we're selling, let's say we're going to sell it up and take the money back to Holland. And then we do another one, we set up another company, and then we sell up and we take the money back to Holland, because we have to set up a new company each time from the commercial funder's point of view. Any implications there with all these individual companies?
Yeah, basically there will be implications because the tax exempt company is a one-off thing. So that company is the one that's tax exempt. And therefore, if you're going to be selling an entire company, what you might need to do is set up a company underneath the tax exempt one. And that is the one that you sell.
So we have the holding company, if you like, at the top, which is the tax exempt. And then we have our individual companies that do the developments, which we often need from a clean investment point of view. And we sell those off individually as we go. But the tax exempt company sits at the top.
Yeah, although I do have people who've given a different view to things. They actually end up doing all of the transactions inside the one company, and they sell the properties rather than selling off individual subsidiaries. But it depends on what the plan is, whether it's a long-term hold or whether it's a sell situation.
And I think the commercial funding thing is a key here for everyone. If you're listening, it's what those commercial funders want to lend into, and more often than not, they don't want to lend and piggyback in companies that have done multiple developments, because they will always have step-in rights. So they want to have the ability to do those in clean companies. Bank accounts. What about setting up bank accounts? There's one last thing. I know I said that was the last question, but this one's popped in my head. Do you find this is more challenging for international developers set up bank accounts, or is that relatively straightforward?
It seems to add a few challenges, but there are banks out there who understand and are quite happy. One thing to bear in mind is the tax exempt company. If you have people in the United Kingdom, you can actually put them down as the directors of that company if you so wish. And in which case the banking is a straightforward UK company with a UK director. So again, it depends on the scenario. And there are banks that will set up bank accounts for what we call non-resident directors. Any
banks that you found that your customers have had good experience with?
Now, that's a difficult one to say on camera. No,
I thought it might be. Choose not to. I think it's a difficult one. It is a difficult one. I'm always asked, and do you know what I do is I always turn it back to my students, and you have one student who's had a great experience with a bank and another one who said, oh my God, they're a nightmare. And it's so difficult, isn't it?
It is very difficult. So I'll keep my powder dry. I'll take the fifth. I'll take the fifth on that.
The fifth. But I think the most important thing, and I think that we can ask, there are banks that will do this. It's just about finding the right contact and the right bank that will do this.
Correct. Yes.
And there's more than one. There's quite a few that will do this, isn't there?
Yeah.
I mean, I get that question all the time. And people going, oh, bank, they don't like holding companies and group companies and SPVs. And they do, because there's a student over there who's done it. You're probably just talking to the wrong individual.
Yeah, absolutely. And even within the same bank, if you're talking to the wrong manager or wrong department, you can get different answers as well. So one person's terrible experience is possibly because they're speaking to the wrong individual.
Yeah, absolutely. Paul, I think that's been great for today. I think we've whetted people's appetite. Hopefully their heads are completely spinning, and I think they're going to have to go and watch the videos. Best way to contact you? What's your best contact details?
The best contact details is to go to my website, which is effectively elitewealthproperty.com. I think if you Google Elite Wealth Property in the UAE, we pretty much cover the front page with all our videos. So go into the website. There's a link in there to book a phone call with me. There's also a link in there to my business CV. So you've got all the background and my UK company, what I do. My job is to train and to teach professionals. Hence, I do a lot of videos that explain stuff. And I get most of my questions from people who say, I've been on the website, I've watched the video. Can I chat to you for 10 minutes? I've got some questions.
So I think the encouragement here is respect Paul's time. He's happy to speak to you, but watch the videos first, because the videos are going to answer lots of questions. There's a lot of detail on there. And then if you've got questions, because you might not have, you might think that's great, I'm going to go away, I'm going to come back in a year's time. But then if you do have questions, then book a call up with Paul. Paul, look, thank you for your time today. I do appreciate it. You got a busy rest of the day?
I have, Richie, yes. Sadly, I've got to go meet an accountancy firm and explain some stuff to them, which is the most fun I've ever had over in Dubai.
Well, you enjoy that. Paul, thank you for coming in. I much appreciate it. And I look forward to seeing you soon, my friend.
Thank you, Richie. My pleasure.
Thanks very much. Hey, was that good? Was that useful? Are your heads spinning on all that pension information and tax and no tax? That's the most important thing. I think that's the only thing you heard when you opened the show today. You went, no tax in the UK, and I'm based in the Netherlands, I'm based in the UAE, wherever you're based. It's possible. And as Paul was saying, this stuff is not new. He's not trying to pull a rabbit out of the hat. He's looking at legislation that's there and making it work for you. So please reach out to him. Get onto his website, watch those videos, and see whether you think that could be right for you. And if necessary, respect Paul's time, but book a call. He is happy to speak to you. Mention that you saw him on here on propertyCEO. That's always useful, so he knows where you've come from. If you are interested, if you're starting this property development journey, or you're thinking of starting property development journey and developing property in the UK, where there are huge opportunities at the moment to earn six-figure sums, grab a pen and paper. I've got some free training that might just get you kicked off, get you started. Just link on to this, okay? propertyceo.co.uk/SFR. SFR, that's six-figure roadmap. It's about earning six figures. propertyceo.co.uk/SFR. Hopefully you've enjoyed today's show. If you do, then just click the buttons or whatever it is you're going to do to like us, and keep coming back and watching further shows. And any comments you've got or any guests you'd like us to bring on, please let us know. Thanks for watching. See you all soon now. Bye-bye.